welcome to my channel Eco Mystery. Hope everyone is fine and safe. So in the today's class we will discuss about the banking reconciliation statement, which we usually known as BRS. We will understand on what basis we have to prepare this, who has to prepare this, and why there is a need to prepare this. But before understanding the concept of the BRS, there is a minor concept that you have to understand from the bank point of view. Like, as we know that in each account we have two sides. Like, overall the accounting is based on the each two side. One is debit side and another is the credit side, right? And I think most of the students has understanding about that the bank statement is also has two side, right? One is debit side, another is the credit side. Okay, so tell me, whenever you're depositing the money into the bank account, just think about it, in which side of the bank statement it should appear. Either it can appear on the debit side or on the credit side, right? So when you are giving the money to the bank, it means you are increasing the liability of the bank, because the money, who has the money, whoever the depositing the money, the customer of the bank, right? Suppose today, Surbhi, I am the one who are depositing my money to the bank. It means money is I have my money, I am depositing it to the bank. It means bank has a liability, right? I can ask them to return my money at any time because it is my money, right? So that's why it is a liability of the bank. And if it is a liability of the bank, it should appear on the credit side, because in the previous class we have discussed liability and the revenue should be appearing on the credit side. Since it is a liability of the bank, so it should be appear on the credit side. Understood? Because it is a liability of the bank, right? And on the similar manner, whenever you are requesting the bank to refund your money, like whenever we are withdrawing the money from the bank, through this process the liability of the bank will reduce, right? So if the liability will reduce, it should debit it, right? Because the same concept we have discussed in the previous class also, whenever there is a decrease in the liability, it should be debited. So just remember two concepts from the practical approach also. Whenever you are depositing the money into the bank, it means bank has your money, right? It is a liability of the bank. It should be credited in the bank statement. But whenever you are withdrawing the money from the bank, it should be debited. It means whenever bank has received any money on your behalf, or if you are depositing any money in your bank account, it means the bank has your money, right? On that money, bank does not have any right. Every right have the customer has every right on that money, right? It means it is a liability of the bank, so it should be credited. But whenever you are making any money out of that money, or any charges that bank has to be levied on you, it means your money will be decreased, right? Or any payment that you have to release from your money, it means the bank balance will reduce. So it means if bank balance will reduce, the liability of the bank will also reduce, and they have to debit it your bank statement. It means whatever the amount you will able to see in the credit side of the statement, that amount reflects whatever the money you have received in your bank statement. And whatever the items or amount or transaction lines you can say in the debit side, it means all are the payments that you have paid from your bank account. Understood? So let's discuss what is BRS. BRS is just a statement that a customer of the bank, or the account holder or the businessman has to prepare to reconcile the balance between cash book and the bank book, because in some time there might be a many reasons due to which the bank balance and the cash balance as per the books of the account will not reconcile. Like, suppose bank has levied some charges, but you have not received any communication, right? So due to bank charges, bank has already reduced your bank balance. Since you have not received communication, you have not reduced your bank balance in your books. So these types of the errors, or we can say the timing difference, like suppose the customer has deposited the check in your bank account, right? You have increased your bank balance in your books, but the bank has not cleared that check. So it means in the bank account the balance has not been increased, but you are already increased the cash balance in your books. So So to eliminate these errors, we have to prepare the BRS. We need to identify the transaction due to which error is coming, so that we can take the necessary steps. So that's why we have to prepare the BRS. So the main purpose of the BRS is to identify the discrepancies, ensure accuracy, and we can, so that we can uh, resolve the discrepancy at a proper time, resolve the issues on the time. So who has to prepare this? Customer of the bank or the account holder. And why we need to prepare this? So that whatever the differences we have, we can resolve on time, we can identify them, and ensure the accuracy between the balance. All right, so let's see few examples that will be able to help us to understand the concept. So these are the transactions. On we have to identify whether we have to add in the cash balance, or either we have to deduct from the cash balance. Okay, so first of all, we need to reconcile the cash balance with the bank balance, and the following reconciling items have been identified. Please confirm which item should be added or deducted from the cash balance. It means we have a cash balance and we have to reconcile the cash balance with the bank balance, and these are the following items that we have identified due to which discrepancy is coming. So we have to identify whether these all are the items we have to add or less. Okay, just apply your general knowledge, apply your just common sense. I hope you will be able to solve it. Okay, there will be no science behind this. Okay, customer has deposited a check but the bank has not cleared it yet. It means one of your customer has deposited the check into the bank so that you will receive the payment, right? But the bank has not cleared it yet. It means the bank has not processed the payment, right? The bank has not processed the check yet. It means your bank balance has not been increased. Since it has not been increased, right? But what you did in your cash balance, you have already increased it, because you know that the customer has deposited the check. It means you have increased your cash balance, right? So it means you have to reduce your cash balance so that it will be reconciled with the bank balance. Okay, next point is bank has charged NEFT charges. So bank has levied some NEFT charges to process your NEFT transaction. So in your bank balance, the bank has debited some NEFT charges. It means they have reduced your bank balance, but you have not accounted these NEFT charges in your cash book, right? In your books of accounts. So you have to less it, right? You have to also consider this. So you have to reduce your cash balance. Next one is bank has received dividend on the share. So it means you have some shares on which the bank has received dividend in your bank account. It means the bank has increased your bank balance, but you have not accounted these dividend in your cash balance. So you have to increase your cash balance so that it will be reconciled. Bank paid an insurance premium through an auto debit mode. So bank has paid some insurance premium charges on your behalf. So bank has reduced your bank balance, but you have not considered in your cash book, right? So you have to reduce your balance. Bill of exchange deposited with bank but later dishonored. So it means you have to make a payment to one of your supplier, and to release their payment you have submitted the bill of exchange with the bank. Okay, but bank has dishonored it. It means the payment was not clear with the bank. Your bank balance will not reduce, but you already reduced your cash balance, so you have to increase it because the transaction has not been processed with the bank. Next is check issued by the company but not yet presented for the payment by the supplier. It means to one of your supplier you have to make a payment, and to release their payment you have issued one check and you have submitted with the bank, but the supplier has not processed it. The supplier was not come with the bank to make a to take their money. So it means your bank balance will not reduced. So you have to increase your cash balance also. Bank credited interest on fixed deposit. So so in this transaction bank has credited interest in your bank balance. It means they has increased your bank balance. So in a similar manner you also have to increase your cash balance, because So there is a basic assumption in all this transaction that bank you have not received any communication from the bank, so that's why you have not aware about all this transaction, whether it was it was already processed, or it was you know debited or credited in your bank account. So that's why, due to miscommunication, you have not any so you are not aware about these transactions. So since you are not aware, you have to take care of it now. Bank has deducted check bouncing charges not yet recorded in the cash book. It means bank has levied some charges on you for the cash bouncing. It means bank debited it. It means they have reduced your cash bank balance. So in the similar manner, you also have to reduce your cash balance. A customer directly deposited cash into the bank that is not yet recorded in the cash book. It means one of your customer has deposited the cash into your bank account directly with the bank. It means through this transaction the bank balance will increase, but you have not increased your cash balance, so you have to increase it. Okay. So next question is, cash book of Mr. Rahul shows a bank balance of 25,000. Okay, so in the cash book we have a balance of 25,000. The following differences were noticed. Check issued but not yet presented for the payment. It means you have issued one check for your supplier, but the check was not yet processed. It means your bank balance has not been reduced, but you have already reduced the cash balance. So it means you have to add back. Check deposited but not clear by the bank. It means when your customer has deposited the check into your bank, but the bank has not processed it. It means your bank balance has not been increased yet, but you have already increased your cash balance in your books. You have to reduce it, right? And in the below now you will be able to find the answers, right? Next question is, the cash book balance of Mrs. Anjali on 30 June was 18,500. However, the passbook showed a different balance due to the following. Bank charges debited by the bank. It means bank has levied some charges, they have debited your bank statement, they have reduced your bank balance. So in the similar manner, you also have to reduce your cash book balance. Interest credited by the bank. So bank has credited your interest. It means they have increased your bank balance. So in the similar manner, you also have to increase your cash book balance. Check issued but not presented. It means you have issued check to one of your supplier, but they have not presented. It was not clear. It was not processed by the bank yet. So the bank balance will not reduce. It remains same only. But what you did, you in the cash book have reduced it, right? You have to increase your cash book balance. For the first transaction, you have to reduce it. In the second one, you have to add back, and for the last one also, you have to add back. Let's check the answer once. Okay, this one less, and last two we have to add back. Third question is, the cash book of a business show a balance of 38,000 on 31st December. On 31st December, cash book showing a balance of 38,000. After comparing with the passbook, they have identified the following discrepancies. First one is, check issued to the supplier but not presented of 7,500. It means they have issued a check to the supplier but it was not processed. It means in the bank balance, the balance was not reduced, so you have to add back in your cash balance. Check deposited but not yet clear. It means one of your customer has deposited the check into your bank but it was not processed yet, so the bank balance has not been increased, so you have to reduce your cash balance. Bank collected dividend on the behalf of the business. Bank has collected some dividend on the shares, so it means they have increased the bank balance, they have credited that dividend. So in the similar manner, you have to increase your cash balance. Bank charges debited by the bank. Bank has debited some charges, it means they have levied some charges, they have reduced the bank balance, so you also have to reduce your cash balance. Direct payment made by a customer. So one of your customer has directly made a payment into the bank. It means they have credited the payment. They have increased your bank balance, so you also have to increase your cash balance, right? Hope everybody is able to understand the concept. The main agenda is to reconcile the balance between the cash book, so that everybody's both the stakeholders are aligned, and just apply a simple understanding. Whatever is credited or debited in the bank statement, you have to consider the same transaction in your cash book. Okay, and please try to solve more and more questions. This will help to enhance your understanding about this concept. Okay, and if you face any issues, if you have any queries, please approach me. I will always try to help you. Okay, uh, have a good evening, and please stay tuned with my channel. Thank you.